Yes, boss.
Recompose. All right. Let's see what we've got. Let me move this thing to one side. Mm. All right. So let me just use this EJ, the illustration I gave on EJ. Then we'll go to your EU. That was EU you traded, Abby.
Yes,
Then
EU, sir.
we'll go to your EU to see what would have done better. Okay. So this was the price action that price presented to us this morning on EJ. Okay, prior to this, I think this was yesterday, 21st was yesterday, right? Was it today?
Yeah, yeah,
Yesterday, yeah.
yesterday.
Okay, so price tapped into a level of demand at this level. Okay, that's why you see this move to the upside. Okay,
Yeah,
this was caused by a demand somewhere on the left. Okay, so price tapped into this demand and reacted to the upside, but then failed to respect this demand. So automatically, this becomes a failed demand level. Okay,
yeah.
now, so failed demand transfers power to the supply that broke the demand, which was supposed to be this zone. Okay, so I'm just trying to
Yeah.
trade explain the whole story that had happened along this area. So it is called flip zone. That is where we get the concept of flip zones from. A failed demand transfers power to the supply that broke the demand. Okay, so this was where I had in mind for a supply to engage from. Okay, but
Yeah.
then if you observe what happened here, price still came down to this level and then respected with this move.
Yeah.
So it means that this demand did not ultimately break this zone, because after this demand sponsored further move downward here, this supply rather sponsored further moves downward here. The demand was still a bit strong, right? To
Yes,
cause
sir.
this two candle movement. And this is my 3 minutes time frame. So my 1 minute time frame, this is a six candle move to cause this movement to the upside. And then it looks very small here, but then if I want to trace it, it's more than let's see. How many pips? How many pips? Okay, so this was a full 21 pip move. So this was no
Okay.
small move at all. Okay, so price was still, the demand was still sensitive enough to cause this move to the upside, right? So it means that this supply here was not what broke this zone. This new demand, this new supply rather, forgive me. Okay, let me
Yeah.
confuse you. So I'll go over it again. Price got to this level, respected, and gave this reaction. Okay,
Yeah.
but then dropped aggressively again to the downside. When it got to the same level, it gave us another reaction, but creating another supply block, which is the last bullish candle before this actual break of structure. So in real sense, it is this guy that sponsored, this guy here was the guy that sponsored this break and not this guy. Okay, those are the
Yeah.
tiny details you're supposed to look out for. So this guy sponsored this break to the downside, right? And then came and tapped and dropped. Okay, so automatically we have a new trading range around here. So this was
Okay.
initially supposed to become the new trading range where our point of interest has to lie inside of this price action here. Okay, because this guy has transferred his strength to this new guy that now in turn violated the supply level, the demand level. Okay, this supply violated the demand level. So price came to that level, right? And then if I want to draw my box here, it tapped into this demand, right? This supply. So why do I keep saying demand? It taps into this supply block here, right? And then it dropped.
Yes, sir.
So we have a grab on liquidity. So price gave us a grab on
Yeah.
liquidity with this high, and then a break of what? A break of
Structure.
structure. So it means that this area price is supposed to return here to give us a POI before further move to the downside. Now, as soon as we
Yes,
have
sir.
a grab on liquidity and a break of structure, it means this is a potential strong high. Even as we are looking
Yeah.
ahead to this high, price has now given us the characteristic of what we want to look out for to classify a potential strong high. Okay, so grab on liquidity and the what, and the break of structure. Okay, so we had this price taking, liquidity taking from here, and then structure violated from here, right? So we are looking forward to price returning back to where, to this area, and then continuing our downward move, right? That's the setup. Now I'll relate
Yeah.
this to what happened on Euro USD, why I said your setup was wrong. Okay, so
Yes,
this
sir.
was this here, this was the price action, this was the whole zone, grab on liquidity, break structure. Now price came here and gave us equal highs, some sort of inducement, without sapping outrightly into our POI. You see that?
Yes,
Now
I
this
see.
was to induce early sellers to begin to come into the market. Don't forget, it has not tapped our POI. But then after creating this inducement, it proceeded towards break structure. So early sellers will begin to think, okay, this is the sell position, then they put their stop loss above. But then if you had followed the story from this edge, you would have known that if you had followed the story from this edge, you would have known that what we have here was a grab on liquidity, break on structure, and then price has not come back to mitigate the other block that caused the move. Do you understand that? So this
Yes,
is
sir.
just an inducement leg, and then it's equal highs. So what did price do? Price came to that level and then tapped nicely. Okay, price came to that level, tapped nicely into the block, violating this equal high as created as inducement leg, and then dropped aggressively. Okay, now the
Yes,
same
sir.
story that happened here, the same story that happened here is the same story I'm expecting to repeat on the other side. What was the story? Now, after price broke this flip zone, after price violated demand and went to retest support, it dropped, right? Price did not
Yes,
come back to this POI again, right?
yeah.
Price did not come back to this POI again. Why? Because we have a new flip zone. The zone that took out this demand became the new strong zone. Okay, this was the guy here that violated this demand. It became the new supply level. So this guy was irrelevant for price to come into. You understand that? The same
Yes, sir.
scenario is what I expect to happen here. Now, when price came here, we had a grab on liquidity, right? This is a grab on liquidity on this low, right?
Yes, sir.
And then price went up to break this structural high, right?
Yes, sir.
So I was expecting a buy when price came here. So I had a buy open for here, and then price gave me a reaction, right? And then what happened? It dropped.
Yeah.
So my first point of interest will be to look for the supply that broke the demand. That is what we call flip zones. Supply, demand broken transfers power to supply. Supply broken transfers power to demand. So if I go to my lower time frame,
Sorry, sir.
what did you
Excuse
say?
me, sir.
Yeah,
Is there another block here? This place that you marked?
yeah, here.
Because this other place, the last place.
Yeah, I'm going to show you that in the 1 minute time frame.
Yes.
I'm going to show you that in the 1 minute
Okay,
time
sir.
frame. Yeah, it's not visible here, but it's quite visible on the 1 minute time frame. But why is this thing being slow? I don't know why it went off. I'll just continue to share. Oh, Imo, you're here.
Yes, sir.
All right then. Were you here from the beginning?
I just joined.
All right. So I was explaining the setup that the buy we just missed on Mr. Pick's session. Can you hear me?
Yes, sir.
So because of you, I'll just go over that again. I'll just go over the story as quickly as I can from the beginning. Okay, so let's use the 3 minutes time frame. I don't know why my network is acting up this morning. All right, so let me trace the story from this point, right? I think this is the best point to trace it from. So our normal setup, right? We have a grab on liquidity here, right? Yeah, and then we have this break of structural high, right?
Yes, sir.
So what is expected is that price will return into this level, right, where we have this other block that lines up with our QM. Price will return into this level and then give us a buy to the upside to violate this high and continue the trend. Okay, you understand? So grab on liquidity, break of structure, return to other block over here, right? But price failed to do that because when price tapped into the other block, we had this move to the upside as a reaction, pretty exciting reaction. Okay, that would convince us to say price wants to start going in our direction. But what happened after that? Price dumped aggressively to the downside and violated this demand level, making this a failed demand. Now, a failed demand transfers power to the supply that sponsored the move that failed the demand. A failed demand transfers power to the supply that sponsored the demand failure. Okay, so that is why on the call, Patrick, we had this zone in mind because we were looking at this zone as the guy that sponsored this bearish move to the downside, right?
Yes, sir.
But what we failed to put into consideration was that when price got to this level, it gave us some sort of bullish reaction again. Can you see this bullish reaction here? This two candle bullish reaction, and this is a 21 pip bullish reaction. So it shows that this supply here was not what broke the structure. This supply was not violated demand, because as soon as this move formed here and gave us these two bullish candles and dropped, it means that this guy, this last bullish candle here, was what sponsored the violation of this demand level. So this guy becomes the supply that broke this demand. Are you following?
Yes, sir.
Okay, so when price came here and then it broke this level of demand, this guy became the new guy that sponsored the move that violated the demand. So this guy became the new supply. That is the concept of flip zone. Okay, demand failed, transfers power to the power that sponsored the failure. Supply failed, transfers power to the demand that sponsors the failure. That's just how it works. That's the concept of flip zone. Okay, and then we had price come here and created an inducement to engineer liquidity to make this supply here efficient. So we had this inducement created here, and then price came in to tap this. Now this was the exact scenario that played out on the right. I'll get to that. So supply, inducement, tap, drop. Supply, inducement, right? Tap, and then drop. So automatically this becomes a new strong high. Why is it a new strong high? Grab on liquidity, right? Break of what? Structure. So what are we expecting? A return to order block, right? Or return to optimum trade entry. Why I like to use optimum trade entry instead of order block, because instead of order block, price can choose to return to fair value gap, or return to liquidity, or return to QM, or return to whatever your setup is. So this is a grab on liquidity, right? With this high, grab liquidity, tapped into supply, and then broke structure. Now, at this point, on the left here, on the right rather, we now had an equal high engineered as what? Liquidity. The same way we had engineered liquidity here before price broke the liquidity and tapped into the zone, right? Price came here after it broke structure. Engineered liquidity. Now, don't forget, after an engineered liquidity, there will always be something to look like a break of structure. For some of you who don't understand the concept of liquidity, that will make you feel like this guy is the new strong high. The idea of that is to make you feel like this guy here is the new strong high. Why? It has broken structure. Too many people trade, break of structure, return to supply, and then drop. But then we are certain that it has not yet mitigated the point that caused the flip. The actual flip zone has not been mitigated. So this was just an engineered liquidity. So price tapped in and then it dropped. The same thing happened here. Price engineered liquidity before our zone and then continued again to what? Break this structural low. Okay, minor structure. To make people feel like this guy here is the new structural high. The price will tap here and then drop. But this is just engineered liquidity because price was yet to tap into our block. Okay, so what happened? Price came, tap into the block, and then it fell aggressively. So it has also grabbed liquidity from this high, right? So we have a
Yes,
grab of
sir.
liquidity and break of structure. Now, there is something key here we should note why I'm concerned about this flip zone. Observe what happened here. Observe what happened here. This was supposed to be the extreme where we expect sellers to come from, right?
Yeah.
But why is it that this market did not return back to this level before it began to sell? Because we have a flip zone. The flip zone is the zone that took power away from demand and made itself the new supply. This is where it is. This is the actual flip. Okay, this was where we had eyes on, but this is the actual flip because of the price action I just explained around here. Okay.
Yes, sir.
Now the same thing has happened here. we have a level of demand in market that was supposed to be respected. Price came in, tapped that demand, gave us reaction. Let's go back to the left. What happened on the left? Price came in, tapped demand, gave reaction. Okay, now as price failed demand here, the same way price failed demand here. So it is only normal that we should expect that this flip zone should cause another movement of price that would drop price to the downside. Now, where is the flip zone? Let's look at it on the 1 minute time frame. Nice. This is the last level of accumulation before price dropped, right? Our last bullish candle before the bearish run. Okay, and then this candle had tapped into a hidden base. There's a hidden base around here that this candle tapped into. There's a block inside of this area. Okay, a hidden base tapped into, sponsor this move and then drop, which makes this area here the next point of interest. Now, this is the extreme that could also be a valuable point of interest because we have grab on liquidity here and a break of structure. So we have two potential zones that price could easily react from. Okay, but then I'm more concerned about this guy because that's the new flip zone. Okay, if that guy fails to hold, then we will now be looking forward to seeing price work from this guy here. Okay, so I'm expecting further movement into this level to drop. Now, why did the buy setup not hold? In as much as it was a nice bullish setup, why is it that these buyers here did not hold? We had a grab on liquidity, break on structure. It was supposed to. Now, I told you supply and demands are points of negotiation. They are not points that must cause price to buy or sell. At this point, you see with this move up here, smart money or market makers had taken their position. They had closed their loss they had in this buy. Okay, because if they drop price aggressively downward, the buy they have sponsored here will be in a loss. So this small movement, now don't forget they had to open. Where's my pen? I was thinking this was going to be just for 5 minutes and I'm talking too much already.
Makes sense.
Okay, they had to open lots of buy positions here to sponsor this move to the upside. Don't forget. So it means market makers has a buy position open here. So if they aggressively run down this buy position, this buy here will be in a loss. True or false?
True.
Okay,
True.
so because they have to close the buys on this position, they tapped in here and then they opened extra buys to force price to move up and then they close some amount of profits before loading further sales to drop price to the downside. You understand that?
Yes, sir.
Now, after this has happened, it means that they do not really have, it means their new sell position, where's their new sell position? Is here because they opened buy positions here to mitigate this buy and take profit of this buy they had sponsored here, right? After they had taken their profit from their buy, what did they do? They opened extra sell positions to cause price to begin to sell from where? This point. It means that if they get to this point and aggressively violate these points, if they get to this point and aggressively violate these points, this their sell position will be in a loss. You understand that?
Yes, sir.
So if we will not sell from here, if we will not sell ultimately from this point, when we get to this point, they will give a reaction to close out sell position before probably buying some more if they are targeting this zone. But because of the heavy bearish momentum in trend, I'm expecting the original move to continue from here and then would not have a need to see higher prices. So we'll just drop from here and then continue with the trend of the market. Do you understand that?
Yes,
So
sir.
price would definitely try to engineer liquidity around this area again to make this area potent before tapping into the area and then dropping. That is my expectation, expectational order flow from what I have on Euro JPY. Okay, so now the question was why did this buy setup fail? Okay, if you have a bullish setup and you have a bearish setup, now don't forget we had this bearish setup up exactly, grab on liquidity, break structure, expecting return towards order block, and we had bullish setup together at the same time, grab on liquidity, break structure, expecting returns towards order block. Now any of them that plays out first becomes stronger than the other. So when you're marking your chart, if you're trapped between a buy setup and a bullish setup, any setup that plays out first becomes more stronger and more likely to hold than the other.
Okay.
Okay, so because price has tapped into this supply first, it means that automatically, even if we are not supposed to have heavy volume, other traders who have seen only supply has jammed lots and lots of positions. Smart money has loaded positions. The whole people who trade this setup are seeing sell setup. So we have lots and lots of positions here active enough to push price down, which will actually weaken the potency of this bullish setup being our demand block here to hold. Does that make sense? But if price had gotten to this level first, if after this break of structure here, we had price come back to this level first, then it was very possible that we would have seen this move happen before further drop into the downside. But because that failed to hold, the area that gets mitigated first has the upper hand. And that was the supply area. So price continued until it pushed price down to this point. Does that make sense?
Yeah, makes a whole lot of sense, bro.
All right. So quickly, let's see if you can see your EU. The EU you took yesterday. Let me try to get the point where you sold from. It was in the morning you took that trade.
Yeah, in the morning. Like, was it somewhere between 10, 11 or so?
Okay. I think it was somewhere around here, right?
Yeah. Okay, yeah. I think so, yeah. That's the place.
Yes, it has to be here because this was 23. Your time zone and ours are not same. So when it's your morning, it has to be our either midday. What's your time what's your time there where you are, Romela?
11:56.
11:56.
I'm 2 hours ahead of, yeah, I'm 2 hours ahead.
2 hours ahead.
Yeah.
Let me try to trade that. 11:56 should be 12:13 should be 13. Yeah. So let me see if I can get that setup out for you. I know it was bearish. I think it was this.
Let me just
I think it was this.
check.
Check the time on your chart. Check the time on your chart or the price. Check the price number on your chart where you had your sales. Let me look it out on the group. Oh, tick. Yeah, I think I've seen it.
Okay.
It was a 165885, right?
Yes, sir.
165885, 330. Okay, let me look for it. That was GBP JPY, not Euro USD. Right?
Oh,
Yes,
JPY.
GBP JPY. I was thinking it was Euro. Let me see that. GBP JPY. That's like my favorite pair at the moment. GBP JPY.
It's like you're paying more attention to what's it called? Asia
Asia.
section.
Yeah, for now I'm paying too much attention to Asia for now. I'm trying to work out on something that I find pretty interesting. Let me get the price number again. 165885. One 165 Yeah, so this was it. Nice. So you entered here 1659 165,885. Yeah, good. So you entered at this point. I think you entered somewhere around here.
Somewhere around there.
165885. Yeah, and price stopped you out
3 minutes time frame.
on your 15 minutes time frame, right?
No, 3 minutes.
3 minutes. Okay, I'll break down to 3 minutes. I want to confirm the exact point you entered 165885. Okay, so I'll look for that setup on the 3 minutes time frame. So just cut and play. So 165. I know I had a sell there yesterday. 165, 887, 884. Okay, so this is the area. Yeah, so let me just cut this area. Then we look for it on the 3 minutes. Is Patrick still here? All right, Patrick is here. Juanita, so you're here quietly too. Okay, so let's get that point. 16587, 16581, 165,885. All right, so I've seen what you did, why I said it was wrong. Okay, this was the high you marked out, right?
Yes, sir.
Yeah, this was the high you marked out to sell from, and then price stopped you out and continued. Do you know why it stopped you out?
Yeah, you explained on the group that it grabbed liquidity, but I didn't let it break structure before
Okay, so
taking the trade.
for you to take this high, it means you are considering that this high grab liquidity here, right?
Yeah.
That is the first thing to consider, that the high is valid. Grab on liquidity, and this should have been a break of structure. But did you have a break of structure?
No, sir.
Good. So the high is not potent until you have a grab on liquidity and break of structure. So this move remains a bullish move, and will continue testing demand and buying, until we have a grab on liquidity that breaks structure. Okay, so we had grab liquidity here, right? So this is under grab of liquidity or a break of structure to, yeah. Grab on liquidity and break of structure are almost the same thing, because structural points are external liquidities. Of late, I don't like to use too much grammar for this thing. So grab on liquidity, price came down. Did he break this structure at this point with this movement? No.
Yes, he
What
did.
did he do? He did not here. Don't let me trace the move for you so you don't get confused. Okay, this high to this, right? This to this, right? This to where?
Yeah.
To this.
Down. Okay.
Before this guy now grabbed liquidity, what now happened here? He now broke
Broke.
structure. This was where structure was broken.
Okay. Oh.
So this was the break of structure. So price came back up and then retested nicely into the area, right? You can see that, right? Retested
Yes,
nicely into the area, and then it fell. Okay, so that was where you got it. That was where you got it wrong.
The thing is, I wasn't seeing this one. That I didn't notice that break of structure because I didn't see the other one as valid. Yeah, that's how you have your arrow on now.
Yeah.
I didn't see that as valid. So I was just focused on this other two.
Now, the best way to understand market structure for people who are new is to always draw lines on your entry time frame. If your entry time frame where you're expecting to take the trade from is which line bright pass for you? If it's your 1 minute or your 3 minutes, always draw lines that shows the actual structure, what price is doing. Okay, always draw lines that shows the actual structure. Yeah,
Your candle, what does the yellow candle represent?
it's just I don't want it to be too boring. That's why I put it on. It's an inside back candle. Yeah, it's not like I use it for anything. If I turn it off now, everything will be too boring. Trading is too boring on its own, so I just like it to be beautiful. You see it, right? So just looking to, I want it to look sweet, at least some touch of fun. Okay, but then, so this is the structure that was playing out. So higher, high, high, low, higher, high, high, low, higher, high, high, low. All of a sudden, we had higher, high, and then new low, violated previous low, came back to tap into this level and then dropped. So created a nice, pretty 1 to 10 that you would have gotten with ease. Okay, I also missed this trade because it happened in around 8:30 thereabout, and then I was trading Asia a day before then, the previous night. So I was waiting to trade London the next day. I was not in that mood for Asia. So when I came, everything had happened already. I felt so bad. I had pending orders here. I opened in the night after Asia, but then I deleted my pending orders. This was a move from Asia, and then I deleted. After I saw this fundamentalist news happened in the night, I just deleted my pending orders. Okay, and then I went to bed, not knowing that, forgetting that price is price, and then we could still have amazing setups come to play. So that was it, and then price continued to misbehave and fall. I'm just trying to see what had played here so I can confirm stuff. Why we came back to that zone. Okay. So this was a grab on liquidity, right?
Yes, sir.
Let's see if we have a break of structure already, but price is yet to give us an root seal. Okay, so that's the return to order block, and then let's see how that goes. Nice.
Sharp.
Okay, so that was a sharp move, pretty sharp move. So this here became the grab on liquidity, right?
Yes, sir.
And then after liquidity was grabbed, we could call. Let's see the change of trend in candles already. Okay, change of trend in candles. So we know when we have a structural shift, right? So this was my last valid point of structure this year, right? And then price dropped aggressively below it. So that was that could serve as a break of structure. Then came back to this. So came back to the other block to grab liquidity. You can choose to box the whole zone up. It's over to you to know what to do with that, or to work with specific candles. But then price has been very dirty of late, so I like to box the whole zones. And then this delivered pretty. How many pips on this? GJ is very volatile. That's why I like it. This movement, it's a 105 pip movement, 112 or 114 pip movement. So that was pretty sweet. So if we had a one lot here, if we had a one lot size open here, that's about $1,000 plus, if I'm not mistaken. $140 rather, sorry, I was talking about a 10 lot. So that was a actually nice move to the downside. 10 times 140, sorry, 1 times, yeah. Yeah, 1,400. That's 140 pips, right? Let me be sure I'm calculating the right.
Yeah, 114.
114 pips.
Yeah.
Yes. 10 times 114. So $140. You'd have made $1,140 off this pip, off this move, risking $110. So this was a nice move, pretty move. Just about 1 to 10, maybe 1 to 10 point something. Okay, so it was actually a nice move to the downside, and then still actually respecting the concept of what we consider as our strategy. Okay, so you've seen where you missed it with that, right? So when you're looking for sales on your lower time frames, always be sure that you have a structural violation. Instead, what we have was high, low, until we had a new low formation. Then this zone can become potent enough to be able to cause price to do what it wants to do.
Yes, sorry, sir. Sometimes my problem is what's it called? Trying to mark out the valid highs and lows.
It's not a
sometimes the price
problem.
can be too subjective.
It's not a problem at all. Okay, it's simple. For example, I'm marking higher highs and higher lows, right? I'm marking higher highs according to what the candle is forming on my lower time frame, especially when it gets to
Sorry,
my.
sir.
Yeah.
Now it looks like you jumped this one. So I don't know, because most times I try to, even this tiny
This one.
high. No, the one before this last one you ticked. The next one. Yeah, it's the one you jumped.
This one.
Yes,
This is not structure. I've taught this on. Okay, I'll look for that video again and highlight it on the group. Okay, I've taught this when I was teaching market structure. I taught what to consider as structure and what not to consider as structure. I'll highlight that video and show it to you again. It's on the group, so you can watch it again. You understand this better.
Okay.
Okay, we have actual candlestick structure and then price action structure. So sometimes we are overly carried away with candlestick structure. We cannot consider this a swing low. Okay, where's that one? It was this one, right?
Yeah, the low after that high.
This one.
No, the next one, there is this candle there. No, the next one. No, sir. Front.
Above?
Front, sir. No, below, yeah, exactly there.
Here.
Below.
Below.
No, below.
This
no,
one.
Yes, exactly. Yes, sir.
We cannot consider this a swing high. Okay, what makes a point a swing point is the concept of three candle formation. I will teach you that shit. Okay, the concept of three candle formation that must align. So this is candle one. Okay, it needs to have, this is how it should look. The three candle formation. One here, one that broke through it, and then something like this. This is how the three candle formation should look for a swing point. It must not be aligned accordingly, but then we must have a lower low, right? A lower high and another higher low. Lower low, a low rather, sorry, a low, a high, a low, a low, a high, a low. Let me just use that, a low, a high, and a low. And I'm calling it a low because I'm calling it a high with respect to inverse. So this is high, low, high. But then if it's upside down, it will be low, high, low. So this is high, this is lower, and this is higher. That's the three candle formation. Now, if you look at this here, we have this one here. There's nothing to the left. Look at what we have to the left.
Yes.
So I cannot consider that, okay? But look at this one here. We have this here, 2, and we have 3, right?
Yeah.
Let's look at the top. We have this here, we have this one, and we have this by the side, right?
Yeah.
Good. Let's look at this one now. I can consider this, this, and this, but I'm using this because it broke this one. It broke below this one. So it becomes this one here, this guy here, and this one in the middle, right?
Yeah.
So this is a valid swing point. You understand? We have this one, we have this one here, we have this one here. Here we still have 3 candles, 1, 2, 3, or we can use 1, 2, and this one in the middle as 3. You understand that? Here we have 3, 1, 2, 3. We also have 3 here, 1, 2, and 3. Or we can use 1, 2, and 3 as the case may be. So there must be the presence of a 3 candle formation.
Okay.
Okay, so just begin. That's like a cheat you can use if you understand it properly. But then apart from that, just look at price itself. Okay, we cannot call this. Where's that again? This low.
Yeah.
Okay, if I'm treating this and this and this, I can as well decide to choose this and say this before this, because if you use this will now become, you want to see this as a break of structure, right?
Yes, sir.
But I would not see that. I would rather see that as an inducement, because even if I will consider that, because it tapped into what? Demand. The only place I would have called this place a lower low was if this demand level was what? Was broken. You see that, right?
Yeah.
Okay, so as far as this level is not broken, there's a high tendency that price can still do anything off this point. So it was not valid enough. Okay, now I can even use this setup to tell you why I have just 1 minute left. Let me see if I can rush it. Why I could possibly take a buy from here. So let's assume we call this a high, right? And they want to see this as a grab of liquidity. Very, very tiny, but then let's consider we wanted to take this.